It should be coming in.
You still got the other one up there, the one that you was trialing.
If you can hear us, please press 1. If you can hear us, please press 1. We're just waiting for some more people to log on. Good afternoon, Facebook. I know you guys are leaving work. Some of you guys are at home chilling, just relaxing, enjoy the day off. But just let us get a few more people logged on and we'll get into our segment. Please press 1 if you can hear us. 2 if you cannot hear us, please. Please share this video. Don't be selfish. Let your friends, family members, let them know that there is a credit live video going on that can help them get their credit back on track. Let them know all the things that they can do to get their credit in line so they can get some of the things that they want to afford in life. We shouldn't be letting our credit hold us back. It's nothing but time. Just put a little bit of effort towards your credit to help you get where you need to get. All right, perfect. All right, so we're gonna go ahead and just get this video live started. If you guys have any questions or concerns, please feel free to put them in the comment section. We have a little moderator, Dan. He's gonna be the one kind of going through, shifting through those questions. So you might see us pause, look off to the side. We're probably getting some of that information from Dan because there is a delay in the feedback that we get through our computers and our systems. So again, if you have any questions or concerns, please feel free to put it in the comment section. And I guess we'll go ahead and get started. Thanks for tuning in, Ricardo. How you doing, Ricardo? We got Tiffany, Miss Dimples. How you doing? We appreciate you tuning in. We got Byron. What's up, B? We got my brother from another mother, Andy McGuire. What's up, Andy? I appreciate you hanging out with us.
Andy, what's up? How you doing, man?
All right. Cool. All right, so let's get this thing started. So pretty much what we're going to do today is we're going to break down the top things that wind up affecting our credit scores and some of the things that we didn't even know affect our credit scores. When we're talking about credit in our world, what we deal with on an everyday basis, we see some of the most minor mishaps wind up destroying people's credit or causing them not to be able to acquire some of the things that they want in life. Credit is our lifeline, is our financial lifeline. Most of the things that we want to acquire from a large standpoint, if we don't have the funds or the resources, as in liquid capital, to obtain those things, most likely it's going to be something that's credit driven. So do what you need to do to get your credit back on track. Share this to a loved one, a family member, somebody who's out there who can pretty much just, take advantage of these services.
And keep in mind, first of all, this information is free. More often than not, you're paying for something like this. Also, most of us, when we get into our first credit issue, it's probably because we just grabbed some credit and we were in a desperate situation and we used it without knowing exactly how it works. So ultimately, these videos are simply for us, not only to give you this information, but also to make sure that you're accomplishing your goals. So please tune in, please share. If you're tuning in right now, if you haven't shared it, then you're doing a disservice to your loved ones. So please share and also let us know anything that we can do to make this experience better for you. All right?
All right, perfect. All right. So the first top thing that most people don't know, which affects their credit scores, is just having minor errors on your credit report. This could be coming from your personal information. It can be actually just having the wrong misspelling of your name on your credit report. We have a lot of clients who come into our office and they think a lot of times that they've been a victim of identity theft. Really, they weren't a victim of identity theft. The bureaus had them confused with someone who might have had a similar name to them. So hypothetically, if my name is Andre C. Coakley, and there's an Andre B as in boy Coakley out there, and the bureaus have me and this Andre mixed up, and they have our information, what we call merged, it can be a problem because this information is going to show not only possible my personal information on my credit report, but also the other Andre's information, all right? So you want to be careful with just having misinformation on your credit report. Another part of that key section is your personal information. When we're talking about personal information, that can be not only just your name, but also your addresses on your credit report. A lot of identity theft also winds up starting because a lot of times we have old addresses on our credit report that we've never cleaned up, we've never gotten off our reports. So when we have this creditor who we've owed maybe 5 years ago, 3 years ago, when they're contacting us at the last point of reference that they knew us from, which was that old address from 3 to 5 years ago. So if that's the case, you might have that information actually reported on your credit report, and that can actually wind up causing misinformation. Therefore, you can have other people's stuff on your credit report. Therefore, it can affect your credit scores in a negative manner. All right?
And keep in mind, your credit report carries fingerprints. Everything that you do, whether you're applying for credit today or 10 years ago, all of those things that you actually put on that credit report are still captured on your existing credit report. So it's something that doesn't necessarily go away unless you actually dispute it with the bureaus. And also, just to kind of piggyback on what Andre said in the beginning, especially people that are a junior or senior. If you are a junior or senior when you're applying for credit, it is important to make sure you're putting that suffix in, because that is another indicator to allow the bureaus to know that you are a different individual than the other person. So please remember, always put your suffix in, because again, that is important.
Actually, that's a very good point. We have a lot of father and son merger of credit, and a lot of times, the son comes in thinking somebody's compromised his credit when it was really his father, and vice versa. We have the father coming in thinking somebody has stolen his credit, and it's been Junior. All right, and it's not that Junior stole his credit; it's just that the bureaus can't decipher who is whether senior is senior or junior is junior, because a lot of times we don't put the key information that needs to be put in order for them to separate and let us know who we are. All right. Jeff.
Ricardo's got a question. He wants to know if it's possible to get an 850 credit score with one credit card.
Ricardo, good question. I'm going to say it's very highly impossible to possibly get an 850 credit score with just having one credit card, because having one credit card is not going to give you all the other, components that need to be made up in order to derive with that 850 credit score.
How about this? Why don't you give Ricardo an example in a relationship term so he can understand exactly?
Say it again now.
Give the question. Give it the answer in a relationship sense. So
So if you have if you meet a woman, Ricardo, and the only thing that she is good at is cooking dinner. However, she doesn't make you feel the way you need to feel. She probably doesn't have the appearance that you want her to have. Okay. So there might be other components with this woman that you might be feeling that are also important, just not one capacity. So having one credit card most likely is not going to give you that 850 credit score, because you're going to be missing some of the other components that are required in order to have that perfect 850 credit score, okay?
So basically, she can make the best lasagna, but if all you eating lasagna is every day, ultimately, it's not going to do you much good, all right?
All right. So actually, good question, Ricardo.
Good question.
Actually, we suggest, the average person trying to build their credit should have a mix of anywhere roughly about 3 to 4 credit cards. However, when you do have those credit cards, the utilization is a very important factor of having that credit card. Having one credit card and having it maxed out can be the equivalent of having no credit, because you're not going to get any of that point segment. You're not going to get that 165 points for having a good utilization ratio on your credit cards.
Also, and if you're building your credit, if you're in the process of building your credit, please do not feel like, oh, well, this credit card, I don't know who this company is. This is not a well-known company. This credit card must not be good. Ultimately, credit is credit, and the objective is really to build upon it. So regardless of what the line is or what credit card company it is, whether they're giving you a $300 line of credit or not, you can build upon that and make that $300 line of credit a $10,000 line.
Exactly. We tell our clients all the time, there's no difference between having a credit card with Goodwill for $300 versus having a credit card with Bloomingdale's for $300. At the end of the day, the name of the creditor, of the value of the creditor, has no bearing on the actual credit limit itself. It's strictly a $300 limit. That's what they look at. So their total exposure is $300. So it doesn't, regardless if it's a Goodwill or a Bloomingdale's, a high end, low end. It's just a dollar amount.
You actually just answered the question, but Miranda wants to know which brand of credit cards like Discover, Credit Union, American Express are better for building credit.
All right, perfect. Good, Amanda. I'm glad we were able to answer that question. Good.
All right, yeah, so you want to have a blend of credit. All right, when we're talking about credit cards, there's mainly two different types of credit cards. There's revolving, and then there's open-ended, okay? A revolving credit card is going to be a credit card that the balance revolves from every month to month, okay? Hypothetically, I have a credit card with a $1,000 limit. I spend $300 on that credit card for that particular billing cycle. When that billing cycle is over, I have to pay interest on that $300 that I borrowed. Or I can pay it in full. So because of that, they call it revolving. So you control the destiny of revolving lines of credit. Revolving lines of credit are very, very good credit builders. Okay, they can build your credit at a very rapid rate if you're doing some of the right things with it. The other type of credit card or other component is an open-ended credit card. That's going to be like a charge card, like an American Express, a diner's card, where it's a charge card where if you borrow X amount of dollars within that billing cycle, you have to pay off that same amount of balance in full within a 30-day period. Hypothetically, if you have an American Express Platinum card, I go out and I spend $40,000 on my American Express Platinum card today. Within 30 days or within 30 days of my billing cycle, they're going to want the full $40,000 to be paid in full, all right? So we want to be careful with open-ended credit cards. And the key factor with that is we've had some clients who've had multiple different type of credit cards, all right? They might have revolving credit cards, but for some reason we have the stigma of thinking that once we get this American Express open card American Express open-ended card, that we are putting ourselves in position to have something with a maximum limit. Keep in mind, open-ended credit cards really don't have a credit limit. So a lot of times, an open-ended credit card can wind up destroying your credit. For example, I had a client, she had 3 revolving credit cards with pretty decent limits on it. She wound up getting an open-end credit card from American Express with no limit on it, and she closed the other 3 credit cards. When she closed those other 3 credit cards, her credit score plummeted because now she's not capturing any of that 165 points from the credit utilization category, all right? So you want to be careful. You want to make sure that you have a multiple mix of different type of credit cards, but good question. All right? All right. You got another topic that kind of bangs up our credit without us knowing?
Well, yeah, something that we all pretty much at one point have experienced: parking tickets.
Parking tickets.
Parking tickets. Parking tickets. How does that affect you? Well, simply when parking tickets appear on your credit report, it's simply because it's actually in collections, simply put.
Yeah, exactly. A parking ticket is a bill. It's something you just can't negate. And what happens is our counties and court systems have gotten smart. Keep in mind, they're in the business to actually, regulate laws and rules and regulations and mandate them. They're not in the business to necessarily collect. So what they do is when we owe them, what do? They hire a collection company and pay them pennies on the dollar to be the enforcer or the muscle for them to be able to call us and collect us and harass us, send you that literature in the mail, making sure you're getting those phone calls and so on. All right.
And if you remember from last week, the 5 factors that make up a credit score, the biggest slice of that pie is payment history. So when you get this parking bill in collections, every month that you're not paying, that's another month that you're late. So all of these things add up and ultimately drags down your credit scores.
So we got a question from Alfonso. He wants to know what sets Credit 360 apart from its competition.
What sets credit? Good question, Alonzo.
I like that question.
Even though we're not here to sell, we're here to pretty much give information, but we want to provide information. So if you're asking the question, I guess it's something that needs to be duly noted.
Absolutely.
I won't say the name of the other company because I don't want to have any infringements on them. However, these other companies normally work on a monthly model. A monthly model sometimes can be counterproductive to you getting your credit repaired. Because keep in mind, if a company's getting paid on a monthly model, why would they rush to get your credit repaired? If I was a company and I get paid every month for you to have bad credit, do you think I would really rush to repair your credit? If you think I would rush to repair your credit and I got paid monthly for you to have bad credit, please press 1. All right? Please press 1 if you think that, that's true. And if it's not true, why don't you press 2 for me? All right? And what we do, we just want to have a little bit of engagement. I want to know what you guys know and what you don't know. Okay?
So Dan, give us a total.
All right.
Just press 1.
So when we're talking about these other companies, that monthly model is not actually normally going to be a quick fix for your credit because they want to kind of water down the services or drag the services. I can't say that for every monthly model company. There are some companies out there that are probably true and they actually want to kind of get you to your destination as fast as possible. However, we at Credit 360, we have a pay per delete program. With our pay per delete program, you're only going to pay for the item once it's removed off your credit report. So you're only paying for positive results. So let's say hypothetically you have 10 items on your credit report. We only remove 4 of those 10 items. You're going to pay a deletion fee for each of the 4 items that are removed off the credit report. The reason why I'm not saying any prices or any numbers is because at the end of the day, this is really an information video. I don't want to come off as selling my product or selling exactly what we can provide for you guys. However, if you do need some one-on-one information or if you do have some questions, please inbox us. Hit us up. We're here for questions. Hit me up on my personal inbox. Hit us up on the Credit 360 inbox, or just feel free to leave a post or anything along those lines. We are here to help.
Or you can always give us a call or find us on the web.
And Credit 360 has a 90-day money-back guarantee. If we are not able to really cause any shifting or movement or improvement in your credit report due to our behalf, we'll actually refund your enrollment fees back to you. But if you have any personal questions or anything along those lines, please feel free to inbox us. And another thing is, when you guys are posting and giving posts and giving comments, please don't put any of your personal credit information on those comments or posts, all right? We don't want to have your information kind of out there to the general public to see, all right?
We want to fix your credit, not destroy it.
All right, perfect.
Okay, so going back to our list here, another common thing that normally appears on the credit report, and it's a negative, utility bills.
Utility bills, all right? I'm from Florida. We from Florida. We couldn't tell you how many times FP&L and Bell South and AT&T are on our clients' credit reports. And it's not a lot of times because they really want to, because keep in mind, utilities is something, it's normally a necessity in today's time. That's not normally a type of bill you can just skate on an everyday basis. You normally need your utilities. Normally the utilities wind up kind of going sour, or the utilities that we see the most default rate on are normally like cable bills. Why? Because your cable company, told you one thing when you originally enrolled in the program. However, when you got your bill, it was 2 to 3 times as much. That's something that I feel like I experience on a on a quarterly basis with my cable provider. A lot of times the bills don't line up with what was originally said. And what do? We get pissed off, we get mad, and we skate on services. We walk. But what happens is we forget the fine print that was on that 5-page contract that we didn't take the time to read. We just signed it, we e-signed it, we gave authorization, and that says that, they can actually put this information on our credit report. They can put us in collections. They can actually wind up keeping us from getting their services in the future. I had a client the other day, actually someone wind up stealing, stealing his electric per his conversation. And he had an electric bill of over $1,200. and tried to get, and he was moving to a new location to try to get an electric bill in his name, they want the whole $1,200 to be paid in full. And this is a guy who claimed that he never even provided that original bill in the first place. It wasn't due to him. It was identity theft. All right. So keep in mind, some of these minor things can cause major hiccups for the long run in our life. Dan has another question.
All right, we got another one from Miranda. She wants to know, does opening a new credit account decrease your credit score?
Okay, very good question. Very good question. Does opening a new account decrease your credit score? That's relative. You can't necessarily say it is going to decrease your credit score. Hypothetically, it has the characteristics to possibly decrease your credit score. Everybody has a different credit profile and a different makeup. Opening that brand new account has the possibility of decreasing your credit score for the simple fact it starts affecting the average age of activity. Keep in mind, if I had one credit card and that only credit card has been open for, let's say, 10 years, okay? And then all of a sudden I open a brand new credit card, that could possibly cut my age of activity shorter because it's showing that I have a brand new credit card in the game, all right? So they're looking at how long have you been in the game versus how long have you been handling the new credit card that you have. Keep in mind, just because I get a new credit card doesn't mean I can keep up with the relationship, okay? For example, if I was dating one girl and I had a second girlfriend, doesn't mean I can keep up with both girlfriends, all right? So what I'm trying to say is you kind of have to be, yes, it has the potential to possibly lower your credit score. However, it's not necessarily saying it will lower your credit score. But that credit card with the perfect habits and the perfect, regimen could most definitely increase your credit scores in the long haul, all right? So just be careful with opening too much brand new credit all at the same time. However, you do have to possibly get new credit every now and then to show that your credit is getting stronger, all right? So good question. I appreciate it. All right. So we're going to the next thing that kind of affects our credit scores and that a lot of times we don't really think about. However, if you got kids, this can most definitely affect you. And the next category is going to be library fees. Okay? It sounds very rare, but I couldn't tell you how many people come into my office flipping mad because their local library is on their credit report for $13. Why? Because they're only going to charge you most likely for the amount of the book. And a lot of times these amounts aren't accumulating to a whole lot of money. However, the occurrence that the negative impact is from the collection account is doing to your credit report, the dollar amount a lot of times doesn't even matter.
And that's one of the biggest misconceptions. Most people feel like I get that all the time. Well, Trevor, they got me in collection for $5. Why is this, killing my credit score? It's not so much the dollar amount; it's the actual negative information that's reported. And keep in mind, an account can be in collections, and that same collection account can also have late payments attached to it. So now you have multiple negative factors going on with that particular account. So,
all right. Perfect. All right, so library fees. The next one, on majority of credit reports. Majority of credit reports who come into our office who have some type of discrepancy or something negative on it, most likely has some type of medical bill, okay? All right. Medical bills can be tricky, all right? Because let's say hypothetically, I break my leg, I go to the doctor. I go to the doctor or I go to the hospital. When I go to the hospital, there are multiple providers who provide the service for me. The x-ray machine technician or company might get a certain percentage just for me using that particular x-ray machine. So we have what we call medical billers, medical coders. A lot of times if they don't bill or code your medical information correctly, if they don't code the list of services or what was provided correctly, a lot of times the insurance company will reject paying those items. And it's not because they don't want to pay, it's because it's not coded correctly. All right? So we're going to be very careful when we're talking about having medical bills. Also, if you have medical bills that you don't believe should be on your credit report, they should be disputed. All right? But keep in mind, with the new act that the Attorney General from New York passed not too long ago, medical bills should not be reported on your credit report for the first 6 months of the occurrence of of the actual occurrence of you owing that particular debt. The reason why is they want to give us a window or a runway for you to try to get these situations straightened out, not only possibly financially, but also with your insurance companies. A lot of times, a lot of clients ask me, or they come in with the myth saying that medical accounts don't affect your credit scores. They most definitely affect your credit scores. They might not do as much damage as a credit card, but they do damage. And the reason why, a medical account is more of a physical occurrence, all right? Something happened from a physical standpoint or a medical standpoint, you could not pay for it, therefore it reports on the credit report, okay? With a credit card is a financial obligation. A loan is a financial obligation. You've signed in writing an agreement to make X amount of dollars or pay X amount of money on a scheduled time with these particular creditors. So what happens is when I go late on let's say a credit card payment, it deteriorates over time. So the deterioration process does more damage than just the collection. And that deterioration process is, I have the collection account, I missed the payment, it goes 30 days late. I don't make the second payment, it's 60 days late. I don't make the third payment, it's 90 days late. I make the fourth payment, it's possibly 120 default at that particular time. Now it's being sold to a collection agency.
So you slow it down, it's a slow death.
It's a slow death. So because of that, it winds up actually dragging the credit scores, all right? You have a question?
Yes, from Andy. Does closing a credit card account and paying it off affect your credit score? If so, why?
Okay. Does paying off a credit card and closing it affect your credit scores? Most definitely. Anytime you pay off a credit card, you don't really want to pay off that credit card. Wait, hold on. Let me back up. Back that up. When you pay off a credit card, you want to pay off the credit card. However, you don't want to close it. All right? And the reason why is because you want to have as many financial relationships open. The example I like to give, if I'm starting at a brand new school, and this is my first day at the school, and I don't know anybody, and I forget my lunch money, what do you think the chances of me being able to borrow my lunch money from someone, and I don't know anybody at the school? Very
Highly unlikely.
Highly unlikely. Very rare that somebody's going to let somebody they don't know borrow lunch money, okay? Example 2. Let's say this is my second year at this school. However, I have a very good relationship with multiple people at this school, all right? I forget my lunch money. I go to one of these people, I say, hey, you know what? Can I borrow my lunch money? Or can I borrow lunch money? What do you think the chances of them letting me borrow lunch money? It's going to be very, 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 very high, because as long as I've kept keeping my face clean and I've kept these relationships open, it lets me be in position to be able to borrow money. Now, keep in mind, just like any other relationship, people are watching how you treat one person to determine how you're going to treat them. So even with credit card companies, Discover is watching how I treat Chase, because you know what? If I happen to become in a relationship with Discover, they want to make sure that I'm handling them the same way if it's correct as Chase, or they want to be a little bit apprehensive with doing business with me because you know what? I'm dogging Chase, or I'm taking advantage of Chase. All right? Was there a second question?
Yes. From April, will your score be impacted by an authorized user on someone's credit card account?
All right. Authorized user accounts can be bad and they can be good, all right? Let me go with the bad first, because we're talking about the bad stuff, all right? An authorized user account can be bad, all right? Let me back up and say what an authorized user account is. Let's say me and Trevor are friends, right? And I have a $10,000 line of credit. And Trevor's trying to build this credit. Trevor would ask me, most likely, hey, Andre, I'm trying to build my credit. Would you mind adding me as an authorized user on your credit card? What this does now, it takes my credit card history and now places this on Trevor's credit report. Therefore, it makes him look a little bit more trustworthy because it's showing them that he's in possession or he has access to $10,000 of Andre's money. Okay? So what's going to happen is if I max out my $10,000 credit card and I don't take care of it, it's not going to affect Trevor's credit score negatively, because now it's going to show that he has a $10,000 credit card on his credit report that's maxed out. So it's hurt some of our clients in the fact or the manner. Let's say that they were on, like I've had clients, they've been on their parents' American Express card, just for an example. The American Express card was maxed out, let's say at $20,000. But when Junior goes to get some type of credit or go buy a car, the car company or the lender is a little bit hesitant with giving them a line of credit or giving them that car because they're already overexposed on another line of credit. For example, if this was dating, all right, and you see me taking advantage of one person, would you jump into a relationship with me? Most likely not, because you're looking at the characteristics of how I'm handling someone else, determine that's exactly how you would be handled. Okay?
Pretty much sums it up.
All right.
Good.
The negative, or that was the negative side of an authorized user. The positive side of it is, let's say I add Trevor to my $10,000 account. I keep my utilization low, which means he's on my $10,000 credit card. However, I'm not really using it. Because of that, it's going to show that Trevor is trustworthy with money because my line of credit is not going to be shown on his credit report, and therefore it should cause an influence for him to have a higher credit score. Now keep in mind, not all credit algorithms pick up authorized user accounts. And keep in mind, Trevor's authorized user, or my authorized user account on Trevor's report is going to be coded as an authorized user account. So anybody who reviews that credit report is still going to know that, hey, you know what? That's not Trevor's account. He's piggybacking off of someone else's account. Okay? That can be a positive and that can be a negative. Yes, you want to try to possibly piggyback or use an authorized account if you can with someone. That authorized account, if they have everything aligned, is going to help you out. Okay? If you're trying to build credit. But be very, very careful. And keep in mind, just because I have a zero balance on my $10,000 card today and I add Trevor as an authorized user, what if I go crazy and I max it out 3 or 4 months from now? Yeah, his credit score is going to be good for the 3 or 4 months, but then all of a sudden it's going to tank as soon as I max out that $10,000 line of credit. Okay?
Okay, so yeah. So in summary, simply put, adding an authorized user to your credit report is not all just the end all be all. It is depending on how that person is managing that credit, that line of credit. All right. All right. So let's go number 6 on the list. Delinquency, child support. Okay. So, well, simply put, delinquency and child support, late payments. Again, late payments are, I can't stress it enough, late payments are just that important to your credit report. Late payments ultimately is going to have this child support reporting on your credit report, because if you're paying on time and you're good, you're not even going to see it on the credit report. So, again, late payments, stay away from them.
Right. So keep in mind, child support shows on your credit report as a collection account, fellas. And it's funny, I can't even say fellas anymore because we had a few clients who were females who had child support on their credit report. All right. And it's kind of shocking because a lot of times when we kind of think of child support, we normally affiliate that with a male or a man. All right. However, it is called child support. All right. So that child support is going to show your credit report as a collection account. So let's say hypothetically, and it's normally going to be the arrears child support. All right. So let's say hypothetically, I didn't pay my child support. I have $10,000 worth of child support on my credit report, but I'm in a payment plan on paying that $10,000. So let's say hypothetically, I'm paying $50 a month on that $10,000 child support. In most cases, in most jurisdictions, they're not going to update that account every month with that balance. They're going to only update it when it's paid in full. So until I pay those $10,000 in $50 increments, it's always going to show a $10,000 balance. All right. So be careful with that. All right, parents. All right.
All right. All right. Number 7 on the list is a little tricky. This is kind of really like a 2-part. Paying off loans.
All right. We kind of talked about that. Well, paying off loans.
I think we should do this in 2 parts. Paying off revolving, and the benefit, and the pluses and minuses, and then installment, the pluses and minuses.
Right. We kind of talked about the revolving. Revolving. Okay, revolving. Paying off a credit card or paying off a loan, you should pay it off but keep the line of credit open. Just let me kind of dig a little bit deeper into that. Most people think credit is meant to be used. Credit is really not meant to be used. The second you use $1 on the credit card, they're reading that as if you're broke. For example, Trevor says, you know what I mean, Andre, man, you're a good friend of mine. Man, if you ever need anything up to $1,000 for you, anytime, all right? So let's say I come to Trevor and I borrow, I borrow $10 from Trevor. The simple fact that I borrowed $10 lets Trevor know that I'm financially hurting because I had to borrow the money from him, okay? So the same thing happens from a credit card standpoint. The second we borrow $1 from a credit card, they read that as you're financially strapped, and therefore it's going to start affecting your credit score. Remember, credit is showing that you're credible, not that you are debtable.
Right. And there's a difference. There's a difference between going to your friend, me going to Andre and say, Andre, let me borrow $5, and then me going to Andre and say, let me borrow $500. If I say, Andre, let me borrow $5, he's probably thinking, well, maybe he forgot his wallet, he left his cash at home, no big deal. If I ask Andre to borrow $500, now I'm more so saying, okay, there's a desperate need for this money. I'm in desperation here. So.
Right. All right. So yeah. So you want to be careful with that. All right. So yes, revolving lines of credit. You don't want to close them. You want to keep them open as long as possible. You want to have as many relationships as possible if you're not married.
There's a caveat to everything.
All right. You want to have many relationships as possible when it comes to credit standpoint. You want to have these relationships open, but yet you don't want to have to be in debt in these relationships. And it shows strength. For example, if I have 5 credit cards, right, and these 5 credit cards have $10,000 limits on them, and I'm not using any of those credit cards, most likely another credit card company is going to come along and try to offer me $15,000. You know why? Because attraction creates attraction. If I'm not abusing these $10,000 credit cards, what are the chances of me starting to abuse a $15,000 credit card? So most likely, if you're handling things on a smaller level and you can manage debt on a smaller level, you can most definitely handle it on a larger level. The reason most people who get a $300 credit card have issues building their credit is because most of them max out a little $300 credit card. They max it out because it's $300. Don't get me wrong. You can pay it off at any given time, but you're maxing it out every month. So a bank is reading that as, you know what? You're broke every month. Therefore, they're scared to give you more because they know you'll take more. All right. So for example, let's say, so if you're borrowing more, if you're taking money on a smaller level, and you're being responsible, they're going to trust you on a larger level. All right. And hypothetically, if I have a credit card maxed out every month, that's the equivalent to me going to Trevor every month and saying, every month, or me saying, Trev, can I borrow $500 for rent? He gives me the $500. I pay him back. I come back the next month. I say, Trev, can I borrow $500 for rent? He gives it to me. I pay him back. I come back the next month. Eventually, Trevor's going to know, you know what? Andre's dependent on this $500. So it's just not really emergency funds. It's now dependency funds because Andre's using these funds on a daily basis. All right. So credit should only be used for 2 purposes. Number 1, emergencies, real emergencies. All right. Funerals, mechanical breakdowns, whether it be a vehicle, whether it be the air conditioner at your house, whether it be the washing machine, whether it be you got to fly to a graduation, or something that's kind of, last minute but very pressing. That's something you might want to use a credit card for, or you want to use credit for. And the second reason is to use their money to make more money for yourself. All right. We have multi-million-dollar and billion-dollar companies still borrowing money from other companies. Why? Because at the end of the day, we want to maximize and leverage their money. You can do more with 2 pockets than you can with 1 pocket. And keep in mind, if I get a credit card for $10,000 right now, and I go and I want to buy an old beat-up vehicle, and I want to repair it and fix it and flip it, all right? I can do that, all right? However, if I'm doing that, I could be doing some positive things because now I'm using their money to possibly make more money for myself. So even if I, let's say, buy a $5,000 car, right? Put $2,000 worth of work into it and sell this car for $10,000. So I've invested a total of $7,000. Plus, say I pay another $500 in interest for borrowing that $700 for 6 months. And I sold that car for $10,000. I still made a $2,500 profit on money that I never originally even had in my hand. All right? So you most definitely want to put yourself in position to maximize other people's money. We look at these companies, Walmart, CVS, Target, $1 million companies with asset, but they also have debt for a reason, all right? But debt can be smart, but it also can be negative, okay? We got another question.
Why would someone else's social security number show up on my credit report and not a family member's?
Why would someone else's social security number show up in their credit report and not a family member's? Credit is very funny. We as laymen, we as individuals, we know our social security number is very sacred, all right? We know it's the main identifier to separate us from the rest of the people in the world. In the credit space, or dealing with the credit bureaus, your social security number is just another credit it's one of the identifiers. Your name is identifier, your address, your date of birth, your social security number. So they take these identifiers and they try to determine who you are once someone's trying to extract the credit report. All right. The reason why you see other people's social security number on your credit report, because when someone originally ran that credit report, they put in the wrong social security number.
Simply put, not every time that you apply for credit is it you applying for the credit. You go to Macy's, one of these department stores, you have a sales associate putting in that information, and simply put, you easily hit the wrong key. So all of that information, again, it's a fingerprint. It stays on the credit report.
Yeah. So keep in mind, you can go to and it might not be your fault. Again, you can go to a department store, and the person who's doing this data entry puts in the wrong information. Even if they put the wrong information, the credit bureaus don't know that you are who you are. So what they do, they say a person who has this name, which is your name, this person who has this date of birth, which is your date of birth, this person who has this address, which is your address, this person with this social security number, but it's not your social security number, they're still going to put that secondary social security number on your credit report to let you know that you have an alias social. All right? And it's not only for your presence, it's actually for the interviewer or the underwriter who's reviewing the credit report to possibly let them know that you might not be who you say you are. And it could be another reason why they might want to check those identifiers and make sure you are who you are. Okay?
All right.
So,
good. Yeah, absolutely. Good question. Okay, back to the list. Number 9, applying for insurance policies.
All right.
Insurance policies, car insurance, homeowners insurance, renters insurance, boat insurance.
Now, most people don't know all insurance, I'm going to say probably, I'm not going to say all, but I'm going to say probably 90%, 95% of all insurances, whether it's health insurance, whether it's vehicle insurance, whether it's home insurance, whether it's life or death insurance, all these are looking at how you handle finances. Keep in mind, how you handle your money tells a lot about how you handle yourself. All right? So they're looking at everything from a risk standpoint. They want to know how risky is it putting money, or now you're putting money, how risky is it fronting money for you just in case of mishap. Okay? So 95% of any type of insurance that you're trying to apply for, your insurance rate or your monthly payment is based off of your credit score. Why? Because they're determining how risky it is putting a value to your life or putting a value to your merchandise. Okay? All right? So keep that in mind. And think about it. If you owned a insurance company that pretty much insured homeowners, all right? And you got this homeowner who wants to get insurance, and they're maxed out on all their credit cards, they lay on their car payment, they lay on all these other things. Would you give them the same rate as somebody who pays their bills on time? Most likely not. Why? Because there's a higher risk level. And remember, the higher the risk, the higher the rate. All right? So you want to be careful with that. Make sure you have your credit in line, because yes, it is most likely affecting your auto insurance, your homeowner's insurance, your health insurance, and life insurance. Okay? So keep that in mind, guys.
All right. Another one we have on the list, cell phones. Cell phones become problematic simply because we'll go to one cell phone company, We don't get approved by them, so we figure, okay, let me go to another company. We don't get approved by that company, we'll go to another company. And what we're doing actually is we're creating hard inquiries on our credit report. Keep in mind, for every hard inquiry, you're talking about anywhere between 3 to 30 points that you're losing. And so each of these inquiries are adding up. And you're not just talking about one inquiry, it's an inquiry per bureau that company checked. So if you go to T-Mobile and T-Mobile checks Equifax and TransUnion, you're losing points not only with Equifax but also TransUnion as well. So that's something to be cognizant of.
All right, good point. We're going to skip number 11. We're going to go to number 12. Number 12, all right? This can be a major impact, just not from a credit standpoint, but just from a life skill standpoint. Not paying rent. A lot of times we have a lot of clients who have evictions on their credit report. And most evictions don't really come from them. Well, let me back up. A lot of times these evictions come from them breaking the lease. And a lot of times our clients are a little bit frustrated because it was normally some other financial situation that wind up causing them to break the lease. However, that lease was the original financial obligation also, all right? So what happens is we have a lot of clients who they wind up breaking the lease, they have an eviction on the credit report, and it winds up really affecting them getting housing in the future, all right? So there's two different things. When you have an eviction in your credit report, there's two different types of reports that it's going to report on. Number one, it's going to possibly report on your credit report, okay? Just like we said, your eviction could possibly be on your credit report. The second report it can be on is an eviction report with your county clerk, okay? Most management companies and apartment complexes, before when they're doing their application to see if you can be approved for housing, they're normally going down to the county clerk's office and seeing if you have an eviction report. Why? Because they want to make sure how you handle prior relationships prior to being in a relationship with them, all right? So you want to be very careful with having evictions on your credit report.
And it's no different, ladies, than when you meet a guy and you're interested in him, and what do? You go ask your friend, you ask that friend, this friend, tell me about this guy. Tell me about some of his habits and his mannerisms and who he is. And so, again,
he got missing on me, girl.
All right, do the same way. So ultimately, again, it is a track record, and that's what the bureaus are looking at.
Remember, credit is nothing but a big relationship, and it's not just a one-on-one relationship. It's not the relationship that me and Trevor have. They're looking at also the relationships and how I handle other people. And Trevor's just not looking at our relationship. He's looking at how I handle other people. You might have some friends who they might treat you well. However, you see how they treat other people, and you're just waiting in line because you know eventually they're going to treat you the same way.
Your turn is coming.
All right? So be careful with that, all right? So yes, if you do have that eviction on your credit report, it can be possibly on your credit report and also on your eviction report, all right? So you want to be very careful with that because that is most definitely going to affect you with housing. It's going to most definitely affect you if you're trying to buy a house, all right? Keep in mind, the underwriter is looking at how you handle your housing before they determine they want to give you $200,000, $300,000 for a 30-year mortgage, okay? So keep that in mind.
All right, and just before we proceed, just want to make sure we do a sound check and make sure everyone is hearing us. Please press 1 if you can hear us, 2 if you cannot hear us, so we can make sure we are coming through clearly. All right? Actually, before we get back to the list, we do have a question, so I want to drop this on you.
Okay, what's your question?
All right, this is from Miss Miranda. It's a pretty good question. What is the best way to protect your credit and social security number?
The best way, well, as we see with the data breaches, all right, you can't protect it if it ain't being stolen from you and it's being stolen from the other source, all right? However, the best way to protect yourself is be aware, be cognizant of who you're giving your data to, okay? Be choosy with your information, the same way you are choosy with your body, all right?
Absolutely.
Inquiries is just as equivalent to sleeping with people, all right? You can't have credit with everybody the same way you can't sleep with everybody, all right? There are consequences and repercussions. So, let's keep that in mind when we're talking about that. The other aspect, you could possibly put a freeze or a fraud alert on your credit report, a fraud alert is really just putting an alarm on your credit report to let you know somebody's trying to obtain your reports. The example I like to give, a fraud alert doesn't stop somebody from stealing your credit. It just lets you know they're trying to steal your credit. For example, I got a great alarm at my house from ADT. ADT doesn't stop the robber. It just lets me know the robber's already in my house, right? So there's a preventive method. However, there's also an alarming method. A fraud alert is just an alert letting you know, hey, somebody's trying to dig into your credit. Do you want to let them access it, or do you not want to let them access it? When you're giving that fraud alert, or you give the bureaus access or permission to put a fraud alert, they give you a code or a PIN that you're able to have to be able to give the person who's trying to, let's say I have a fraud alert on my credit report, I'm trying to buy a vehicle, I go to buy a vehicle, the car lot says, Andre, we can't access your credit report. It's because I have a fraud alert. I give them this PIN, then the bureaus will then release my credit report to the specific people who have authorization per my authorization to view my credit report.
Okay.
All right.
Okay, and all right, so let's go through this really quick. Gym memberships from back in the day. Simply put, if you have a gym membership, you don't want to use it, close it. Because if not, it is a current debt bill, and so now you're being charged late payments. You're being charged all types of fees, and ultimately that is the information that gets reported on the credit report negatively. All right?
Yeah, so when we talk about gym, real quick, most gyms, all right, if you don't have a gym that is strictly monthly with no contract, all right, you want to try to go with possibly monthly and no contract. One thing I have noticed about gyms, most people don't have the desire or the discipline or the strength to normally finish out a whole year gym contract. Mainly we work out in spurts. We might work out in a 3-month spurt, then we might take 2 months off. The problem is when we're taking those 2 months off, most likely we're hesitant with trying to pay bills that aren't really applicable to us in that given time. So we might have that gap there before you know it. You got late things happen. You have late payments, or you have a collection on your credit report. Now keep in mind, remember, when you go to this gym, you are signing an agreement if you signed a year's agreement. All right? So they might be charging you on a monthly basis, and they're going to give you all the reasons when you're signing up with that rep. The rep is saying, hey, you know what? If you ever get hurt, you ever just get injured, you can just let us know and we'll cancel the contract. But did you read the contract? That representative who is telling you all that information, he ain't going to be there by the time you're trying to sue that company. Right? And all the telephone conversations that you think are recorded, they're not going to give you that telephone conversation because it's recorded to your benefit, not their benefit. Whenever you call a company and that information is recorded, or mainly if you have a company and that information is being videotaped, but if you're trying to sue them or you're trying to litigate against them, do you think they're going to let you get access to that information?
They can't find that information.
They're going to play dumb with you, all right? We see it happen every day in the collection world. We have clients who talk to, debt collectors on the phone. They might, the debt collector tells them one thing on the phone. Oh, we'll agree to a settlement. The person sends in the money. They call in the next day. Some other debt collector or some other agent is on the phone, and they have no clue what this person just prior to them said. Oh, I'm sorry, ma'am, the account is not noted. Well, don't you have the telephone conversation recorded? Well, it's only recorded for quality purposes and educational purposes. All right? Not for litigation. So let's not get caught up with just because we hear that recorder thinking that the telephone conversation is being recorded, that it's being recorded for our benefit. Okay?
All right. Next on the list, we have bank overdrafts.
Bank overdrafts. Okay. A bank can send you to a collection company the same way any other creditor would send you to a collection company. But when we're talking about banks, or we're talking about overdraft, banking fees, or closed accounts that have insufficient funds, they can send you to check systems. So you have two different sources. It can also hit your credit report, but most likely you're going to be on check systems. Check systems is a system that banks use to let them know that you've gotten over on another bank. Okay? So hypothetically, if I have a insufficient funds account that I never paid from 6 months ago with Chase, and I go to Bank of America, They're going to run my check systems report. My check systems report is going to say, you know what? Andre owes Chase. You might not want to open an account with this guy because you know what? Characteristics show us this guy gets missing. He's a track star. He like to get y'all money, put his Nikes on, and get running, all right? So you have to be aware of these things, all right? Because I have clients who they say, hey, you know what? I can't open up a bank account, but I don't see this on my credit report. Because most likely it's not on your credit report, it's on check systems, all right?
All right. And we have one more. Requesting credit limit increases.
Okay. Catch-22 with this, requesting a credit limit increase. When you have a credit card, anytime you have a credit card, you most definitely want to be trying to ask for an increase if it's not causing an inquiry on your credit report, okay? So let's say I have a Capital One account. I've had a good relation with Capital One. I give them a call and I say, Capital One, I want to get an increase on my credit card, okay? Depending on the timing, and depending if my account balance is in line, I might want to even hesitate doing that because let's say my account is overextended or I have a high utilization. Most likely Capital One is not going to give me an increase because I'm already tapped out with what they have, okay? So hypothetically, let's say I have a $500 credit card with Capital One. I'm already maxed out with this credit card. They're not going to give me $1,000. Why? Because they know as soon as they give me $1,000, I'm going to max out that $1,000. All right? Human nature. If you spend a little bit of money, you're going to spend a lot of money. Human nature. If you spend a little bit of money, you're going to spend a lot of money, okay? So they're rating us and grading us how we're spending these small incremental amounts of money to determine if they're going to give us more money, okay? So with that credit limit, it's going to cause those it could possibly cause inquiries, all right? And that's what you want to be careful of. You want to ask for increases, but you also want to ask prior to increase, it's going to cause a hard inquiry on my credit report. If it's going to cause a hard inquiry, you might want to be hesitant, or you might want to think, hey, you know what? Is this inquiry going to ding me? Or is it worth the ding now to possibly have something stronger in the future? However, if you do have any credit questions or concerns, we always suggest that you consult somebody who is well versed in credit. It doesn't have to be Credit 360, but I know two smart guys sitting in front of a camera who can pretty much answer any credit question that you have, all right? And I tell our clients all the time, I've seen a few 100,000 credit reports, but I've never seen two identical reports. So because of that, you got to be careful with what remedies you're doing for yourself. I use the example all the time. Me and Trevor, we do the same workout sometime. He got a six-pack, I got a pudge, all right? I can't affect that, even though we're doing the same exact workout. So what I'm trying to say is results vary, all right? Side effects vary. I might do one thing for Trevor's credit report. It might go up 30 points. I do the same thing for your credit report, and it can possibly go down 5 points. Why? Because it didn't respond to your credit. Or it might have been a segment of your credit report that you've already capitalized all the point usage in, and us trying to do this thing didn't mean anything to your credit report, but when we did the Trevor's credit report, it actually opened up a whole new category of point usage. Okay? So we're here to help. We're a credit repair company. We love helping good people with bad credit. Credit, as I say, is the lifeline. I don't care what you're going to do in life. I don't care if you're making $1 million or if you're making just $1. Most likely you're going to encounter credit somehow in your life. All right?
Absolutely. So
let's make sure that we're doing all the right techniques, all the simple things we do. These are some of the things that we actually inspire into our clients on a daily basis. A lot of times we know the route and we know the routine, but we still need a GPS. We still need somebody to help us, guide us in those fine-tuned situations to be able to make sure that we're victorious with getting our credit back on track.
Especially if you've never been in that area before. You know, if you've never been in that city, you definitely need a GPS. And ultimately, with credit, most people have never taken the opportunity to be educated in credit. We get self-diagnosed, or we allow, you know, our neighbor to diagnose our credit issues. And ultimately, this is what we're here for. We're your doctors of credit. So if you have any questions, even beyond this video, feel free to drop us an inbox message. Feel free to give us a call. Feel free to reach out to us on the website. please make sure that you're sharing this after the video. Share it, because ultimately we want to get the word out that we are here and able to answer any questions regarding your credit. We want to see you guys achieve your credit goals, so please let us know as these videos are posted how the information is helping you. Any success stories, let us know, please.
Yeah, tag 5 friends. Just don't share it. Tag 5 friends. Make sure that you know that they know that you care about them.
Absolutely.
All right? And as we said, this is a process. I didn't always have good credit. It took me years after some mishaps, some defaults, some falling on my face, some busting my ass, pardon my French. But that's what it happened. And by me learning these techniques, by me being steadfast, by me understanding that there's a process, I was able to revamp my credit and do some things. And now I'm able to actually build a business and actually do some of the things I would normally not possibly been able to do just through the actual function of credit.
Absolutely.
All right. So we're Credit 360. We're here for you guys. Anything we can do. We have an open phone policy, open door policy. Feel free to contact us. Feel free to contact Trevor. You can inbox us. Catch us on the web, www.credit360.biz. On the web, you can also set up a timed consultation. You can also just see information about our product or our services or what we can do for you. You can also see some of our testimonies of videos of some of our clients who've experienced our services, and they can tell you a little bit what they've gone through with this whole 360 process.
Good source of reference there.
All right. Actually, we're getting ready to fly out to LA tomorrow. We have a big credit repair conference with the Credit Repair Expo.
And we got some big news coming up we want to share with you guys, so stay tuned.
All right. Yes, good news. Blessings have been coming our way. If I haven't said it, God is good to Credit 360. He's been blessing us in so many ways, and we just appreciate everything that we can do for you, because we're only a blessing because you guys are a blessing to us. All right. We appreciate you. Thank you. We love you. Peace.